Welcome everyone to Weird Growth, the podcast where we hear about the strange and often unpredictable journey that founders take. But the conversation doesn't end here. If you want to stay one step ahead and unlock access to exclusive insights, thought-provoking summaries of our latest episodes, and a curated collection of valuable resources from across the web, don't miss out on the Ammo Marketing newsletter. Please subscribe to our newsletter by the link in the description. This episode, we are privileged to be joined by Oliver Kidd, who is the founder and co-founder and CEO of Archa, which is an Aussie fintech with Australia's smartest corporate credit cards. Archa has been voted Australia's best corporate credit card. And as someone who runs a business myself, and I've had multiple nightmare experiences with banks and credit cards, this does sound bloody good. Oliver is also a board director at Fintech Australia and I believe has a background in law. Oliver, welcome to Weird Growth.
Thank you. Thanks for having me. Happy to be here.
Great to have you on, mate. Just to kick off, could you please just introduce yourself and how have you come to do what you do?
Yeah, well, as you said, I used to be a lawyer. I was from Queensland and I studied law and thought it was, I think it was a good idea. I went into mergers and acquisitions and
right.
As a lawyer and I really enjoyed that. And then, over time, kind of was more interested on the business side. I ended up being seconded into a mining company during the law firm that I worked at for 6 months. And that was a really great experience. I loved kind of being in the business and interacting with the different teams. And that was all super interesting to me. And so after that ended, I wanted to kind of continue doing that. I actually took some time off and then eventually, moved down to Melbourne and wanted to effectively continue being a company secretary for listed companies, which was a wild experience when working with like really small listed businesses. The mining company I worked for was massive and little tech companies and biotech companies. I started kind of working internally in their legal and compliance and ultimately in a lot of those businesses in strategy and ops and other areas of the business, which I really enjoyed. And it was in the background to all of that I wanted to start my own company and which was maybe maybe a bad thing, maybe a good thing, but it's turned out to be great. But at times, obviously, very stressful, as everyone would know. But it was just like from kind of working in all those different businesses, I kind of wanted to explore what having my own business would be like, and something in tech was always something I wanted to do.
Yeah, no, 100%. And that little fire within often gets kindled, when people do start to get under the hood a little bit of businesses and experience what it's like to actually be part of, guiding the direction of a company. And the most wonderful thing is when actually people act on that and give it a go themselves. So good on you for doing that. That's what Weird Growth's about, actually, is hearing about, what it was that gave you the impetus to take that step, but also what unlocked is often the reason it's called Weird Growth is there's often this strange thing which you couldn't ever have predicted that told you actually we're onto something here and need to continue following that thread.
Yeah, it's funny. Archa doesn't really have like a founding story. Like a lot of, I don't know how many of the founding stories that you hear are real, but we don't have a very good founding story. But the honest version of why we ended up here building corporate credit cards was we started in the consumer space. Like I wanted to build a neobank. I thought that was a really interesting idea and something, coming from a legal background, I thought, that's going to be helpful. And I think maybe a bit naive around the complexities and the economics of building that business. And that was sort of coming to light in maybe within sort of 12 months of starting the business. It was becoming really clear that was going to be challenging. And sort of, I wouldn't say maybe having an existential crisis, but sort of just like thinking, oh my gosh, what are we going to do with this business? This is, it's going to be slow. If we try and build this neobank thing, it's going to take a long time. And at the exact same time that all that was happening, someone in our team purchased a subscription to the Financial Review on our bank card. And it took me so long to figure out who had done it. And then when we did figure it out, and the person was like, oh yeah, they're in our marketing team, like, oh, it's about learning the market, whatever. And I thought, that's not an expense I would have approved. And so I marched across the street to our bank and asked if we could get some corporate credit cards, just like low limit cards. And we
Yep.
wanted to, I said, like, there's not a credit risk. I'll give you a term deposit equivalent to like the value
Yep.
of the credit that you're extending. It's really just so I can make sure the team has a capacity to spend money in a controlled way. And I remember this person laughed me out of the branch, like it like cackled in my face.
Really?
Like as in like, what a stupid request. Like we're a startup. Why would we give you guys credit cards? And I kind of explained it's not going to be a credit risk and you don't need to worry about that. And then she said, even if we did do that, we don't have the product you're looking for. You can't have these multiple cards for your different team members, and like we just don't do that. And this is a big four bank, and I remember I left and I walked up Collins Street, and I went to all the different banks that I could find, just asking the same question, not thinking I was onto anything, just kind of being a bit annoyed.
Yeah.
And then it became clear as I walked on, like this is actually kind of an interesting problem, actually. And I remember getting back to the office and called one of payments partners and some others and said, like, we want to do corporate credit cards, I think. Like, what do you guys think about that? And it was just that's sort of that's been the focus ever since then. And that was, 5 years ago.
It is bananas how backwards banks, the big four, are still to this day with the product offering that they have, and some of the hoops that you have to jump just to deal with them can be infuriating.
Yeah. Yeah. And it's like, as you would imagine, we hear all kinds of stories about the underwriting process and getting access to cards and onboarding new team members and offboarding team members even. And I think what people maybe don't realize is like, yes, it's the big four banks, there's lots of banks, but inside those banks, there's like, 2 or 3 different banks in terms of, there's a small business bank, there's the business bank, and then there's like the institutional bank, and they all have, in many cases, different offerings. And so you'll often have very different experiences with the same bank. Not all of them would be as bad, but a lot of them are pretty negative.
Yeah.
And that's really what what's what Archa is supposed to be doing, really, is, we wanted to just make it easier to give cards to your team members, and build a product that can compete with the Amexes of the world, in terms of, the reasons why you might have a corporate credit card outside of managing your team. So kind of bringing those two needs together.
Yeah, sure. For 10 years, I banked with Ammo with Bank West. We're a West Australian business. I'd always used Bank West. Last year, they decided to shut down their business banking arm, and just closed our bank accounts, sent us a check for the balance. Said, you're on your own.
Really?
Guys. If you'd like, you can go to our sister company, Commonwealth Bank, and you can imagine how excited I was to do that. I'm not rewarding you for that bad behaviour. And so then I went on a journey of, okay, well, I'll go try NAB, which was horrible. And their corporate credit card started charging us like extra percentages for international transfers, which when you're a digital business and most of your subscriptions are overseas, you're paying like an extra 5% on everything. It was just an infuriating experience.
Yeah. It's very bad. And the problem is like, not to be, not to be too salesy or harping on about why our product is phenomenal. But the problem is like the products that the banks will generally offer aren't super usable in terms of, how you get access to the product and how you control the product and issue it and close it or whatever you want to do with the cards. But then also at the same time, that I think a lot of the time the businesses are set up not to have a very good like relationship management function for mass market, like the bulge bracket of businesses in Australia. And so those two things can't both be true. Otherwise you're going to have unhappy customers. And, that's where we've had a real focus actually on both sides. Like I think we have a very usable product, but we've also not, maybe different to a lot of tech businesses, like we also have a very like relationship focused approach to our customers as well. Like our customers will call the same person when they call us if they want to call us for any reason. That person will know their business and know what they're looking for and know how to help them.
That's great.
Because I think that like that was the other thing we really struggled with was like we thought we weren't nobodies, we weren't important, but we weren't nobodies, and we just couldn't get a relationship banker on the phone to help us with anything when we were dealing with challenges. And it was, just so many benign issues that just were turned into such pains for no real reason.
Just a question, like, is it because the value of doing business with that scale of client is just not worth it to the bank, and they're like actively enforce policies to make it difficult, or what's the?
Well, I think maybe, but also I think you've got to think about like where banks make a lot of their money. And it's from large loans. Well, in the commercial bank at least, there's like commercial lending is a big
Yeah.
revenue driver. And I think the other challenge is like, if you're thinking, I could talk specifically to corporate cards, like building a compelling corporate cards product offering for customers can be a really expensive thing if you're starting with an existing bank and trying to change existing processes and onboarding processes and, card systems, payment processes, whatever however you're managing it all. And I think sometimes, the teams that are in those banks or financial service providers or whoever that are tasked with fixing that problem, they can't get the support internally to like financial support, the investment support, to make the structural changes that are needed in order to offer a compelling product. And even if you can, it's a long process. It's big businesses obviously are hard, and it's hard to turn things like that around. And so sometimes even when you do get the investment support or the strategic backing, it's still hard to get right, and it takes a long time, and you still might not end up exactly where you wanted from a customer experience perspective. So, we were really fortunate, obviously, because we're starting with a green field. We can just build what we know. You can start with what you want the customer to experience. And we were ultimately our own first customer trying to solve our own problem, which always helps because we know exactly what we would have wanted to have happened.
Yep.
And so, I think the challenge is often like the incentive drivers for any business is, how do you make the most money? How do you make the most profit? And that's, when it comes to corporate cards, that's often not aligned directly with where the investment is going to go, because it's not going to be your biggest revenue driver or your biggest profit margin. It's much more interesting to see how you can get that extra, couple of basis points on the mortgage book or on the commercial lending book. So, so it's like a immoral thing. It's just not where people are naturally going to focus, because that's not how you're KPI'd.
Yeah, and I understand. Yeah. Where did you find, so you discovered this problem, and it was a real problem. A lot of businesses rely more and more on credit cards for, subscriptions, daily transactions. I know that our business probably has, double digit credit card transactions every day.
Yeah.
Where did you find your first customers for the product?
Well, I mean, our first customers we found for the product, when we launched, we did a launch campaign with Uber, and we had a great deal for customers where they could get Uber for business credit. And so we had a lot of businesses applying when they were trying to kind of, this was just right after COVID. So, people were starting to move around again. And so that really worked, and people were really interested in giving their teams better ways to spend now that they were kind of moving around again. So we saw a lot of customers come through there. But where we found our best first customers was through cold outbound.
Right.
And I'm obviously skipping over the friends and family stuff. Like, we had a lot of first customers that we knew and who worked in our co-working space and, all that sort of stuff. But if we're talking about like the first real customers, the first genuinely good real customers were from cold outbound. Cold outbound from me. We had a guy in our sales team who was adamant that this was the right approach. And when you think about growing a business like this, you've kind of got different avenues to get to market. And we thought, is this like an SEO thing? We're just going to get lots of blog content and then support that with some digital marketing and get people onto our site and, just scale that up. Is this a cold outbound thing? Like, it's just a true, like a sales, like mass market sales approach of just cold outbound to mid-market of Australian businesses? Or is this partnerships just through like setting up relationships with maybe financial services providers that don't offer this product and their customers are asking for it, or banks or other organizations there who aren't interested in serving? Or is this an enterprise product? Is this something where it's like, it's back to the sales approach, but it's less about cold outbound and more about like the grind of like a 18-month deal to try and win a big business? And what was clear is like, it's definitely at that stage, it definitely wasn't the latter. It wasn't the big kind of enterprise stuff. We knew partnerships made a lot of sense in terms of distribution, so we had some focus there. And we really tried a lot of it, but where we saw the best customers coming through was that cold outbound approach. And we were surprised by how receptive people were to hearing, just on a cold call, which I know are very annoying, about corporate cards. And a lot of people were surprised to hear that you actually could get a corporate card outside of a major bank.
How good. What did that look like in terms of, how would you just decide who your prospects were? Was there a sort of standard script, or were you trying to get in front of people, or was it phone,
Well, it was
email?
easy for me because I could call up and say like, hey, I started this credit card company, and there was a plan. Like, there was a plan, certainly. We like to focus in businesses that were based near us as a starting point, like in our postcode. And because then we could say, hey, like, because it's a good opening, I think, to say, like, hey, we're actually we're based around the corner from you guys. I see your name when I leave the station.
Nice.
I actually started this credit card business. Wondering what you do on expenses. And then they kind of say, oh, what do you mean expenses and credit cards? Like, well, actually, we've built a product where you can combine your expense management, integration into your accounting system and all that kind of stuff with a really good corporate credit card offering where you can issue cards to your whole team. And then it was just a target of like, just get a demo. And even today, like, because we knew back then, like our demos were really good and we would generally convert demos to customers, 67% of the time, is kind of the rolling number.
Yep.
And we just knew if we could get demos, we would probably get customers. And so the goal was just to get the guys interested in learning a bit more. And I think, at the starting point, it was me and some others, and we, we knew that it was probably unfair advantage because, you could say, oh, hey, I started this company, but then now at bigger scale, it still works. Like we still put, it's a really good growth strategy we're finding, just that kind of more traditional. And it also matches our product, right? Like we have a really good relationship management function in the business. And so it makes sense to start that way.
100%. Such a undervalued tactic for founders to use, that little hook, right? Like if you're able to talk to another business owner or, a prospect, and you able to just use that little, hey, I'm the founder of this and I'm almost asking for help. It's such a good little hack at the start just to get that, just to sort of break down that barrier. You're not just a salesperson in a call center. This is a genuine and authentic approach, and I'm just almost asking for you to just help me out and give me an opportunity.
Yeah, exactly. And even now, like at scale, when we do kind of cold calling and that kind of stuff, it's like same thing. Even though we're not as small as what we were, like it's still, you're talking to people and you're the founder, and like, hey, what are you guys doing on expenses? How do you think about this? And people are still interested to have a chat, generally. And obviously talking about the banks and that kind of stuff is a bit of a hot button topic when you talk to people. People love to rant and rave. So yeah, that's always good.
Yep. When did you realize, hey, like we're onto something, this is getting serious?
Well, honestly, at the time, there were probably lots of moments like that. Probably the first one that comes to mind is, when pitching, because this is not a bootstrapped company. This is something that's expensive to run. You got to raise capital, and you're funding. We run the balance sheet as well, right? Like we lend money to these customers, so you have to raise debt. You have to raise debt funding. You have to raise equity to support it, and then you've got pretty significant direct costs to run the corporate card program as well. And so like one of the first reasons where I thought we were really onto something was when like just pitching to people, and having those very early conversations around investment. It was like we had gone, because we started in this consumer space, it is like we'd gone from selling a vitamin to like a real painkiller. And you never had to tell people anymore what you were building or why it was going to be useful. Or, using the vitamin analogy, you didn't have to remind them to take it. You didn't have to explain the benefits. And it really shifted to like, we're almost like selling like Panadeine Fort or something. And people were like, enough chat. I know why I need this, like hand it over. And that was probably the first time where it was like, oh my gosh, we should have done this a long time ago in terms of really pushing into this space. And then from a customer perspective, it was just when we realized how low our churn rate was. Like we knew it was a sticky product, but then after some time, when the business matured to a point where we could actually have some insights in terms of our customer base and what customers were doing, as in we had the insights, but there's no customers. But once there was enough customers there to read anything into that, the churn rate was like sub 0.5% annually. And that was mostly businesses closing. If they said, oh, we're going out of business or whatever else, it was just like no one would leave.
What do you attribute
and that was
to? That's incredible.
Well, that's when I still thought our product was bad. I thought the product doesn't do enough. It needs to do more. It doesn't, it's not enough integrations. The card controls aren't there. And I just think we probably undervalued how annoying it is to deal with corporate credit cards. And once you find someone you like, it's like a really, really sticky product, which creates a really long and valuable lifetime value of a customer. So yeah, I don't know what I attribute it to other than it was a really painful experience. Obviously today I would attribute it to that. I think we have an excellent product and we've built all those things that I think we needed. But even back then, I think it was around just like maybe understating the challenges and also honestly understating the value of a corporate card. I think, in the market, people used to think a corporate card is like where you pay for your flights, or you pay for your dinner or whatever. But like actually a corporate credit card, if you look at it through like the lens of a tech business, it's actually like a really good accounts payable function that should sit across your whole business, creating virtual cards for different expenses,
Yep.
single use cards for one off purchases to reduce fraud risk, small cards that are easy to issue for interns who might only be there a week, so small balance cards, you know, as well as the standard corporate credit card for the director that has a big limit and they can go and spend all their stuff on.
Yep.
And when you couple that with, expense management and integrations and, all the great benefits we offer, I think that you have a really sticky and compelling product proposition, which goes beyond what people would probably normally think about using a corporate card for.
That was basically, why would you change? And if you've got that product market fit, and it becomes integrated as part of the day-to-day operations of a business, there's no reason to change, right?
Yeah, exactly.
Just product-wise, so people are able to jump on to their Archa platform. Can they set up a soft credit card, instantly? Is that the sort of process?
Yep. You can do all that. So you can, on your phone, we have mobile apps, so you can go on the web and on our web app. You can create cards instantly, single use cards, limited use cards, you can issue physical cards. Obviously, that's still something people really want.
Yep.
All the Apple Pay and Google Pay stuff you can do.
Can you set up a soft card and then push it to Apple and Google Pay? Yep.
Yep. You can create a soft card and push it straight to mobile and start spending.
Oh, good.
You can be approved in like a very short span of time, like in an hour, or if you've got all your information, almost right away. And then you can start spending immediately, create a card, put it in your wallet, on your mobile wallet, and start spending. Or you can, you go through an OTP process and see the card number and put that in online so that you can, transact with an online merchant. So it's really easy, and we still have the rewards program that you'd expect to get with a mainstream corporate card. Often some don't have rewards programs, but
really,
we wanted to make sure we had a really compelling proposition around rewards as well, because that's a big driver for a lot of small business owners, particularly who need that.
Yeah, a use case for us would be we do a lot of digital ad spend for clients, and having a separate credit card per client, so we can really keep tabs on the spend limit, and then they reimburse us for those costs. But if we had the opportunity to earn points on that, that would be super compelling. That's cool.
Yeah, it's really common use case, and you'd be earning points on that, and you'd be able to, I imagine, save a lot of money because we charge 0% on foreign exchange fees. So you like a zero margin. There's no added margin on our cards on the currency rate. So a lot of our customers will just make back our fees on that alone.
Yep. Amazing. I listened to the episode of Acquired where they covered, I think it was Visa. I don't know if you've ever listened to the Acquired podcast, but they do like a deep dive.
But I haven't heard that episode.
Corporate history, absolutely fascinating how that business started and scaled, and still how sticky Mastercard and Visa are as the dominant credit card players. Do you ever see that sort of duopoly changing in the future?
Look, who knows? I think like with cryptocurrency and all that kind of stuff, I think other payment networks will probably start to emerge. I think that like it's just one of those things, right, where it's like a very efficient way to facilitate payments, and it's kind of just become the norm. So, yes, I think it may change in the future. I'm not so much a payments evangelist on these sorts of things, so I don't have a strong view. But we work with Mastercard, and we've found that like those guys are super aggressive when it comes to innovating and doing more and helping merchants accept more payments and helping customers issue cards more quickly. And the benefit of having a businesses like those guys involved is they can make sure that like payments rails operate with a level of hygiene that needs to be there, and that cuts across fraud and acceptance and technology and mandating certain requirements to make customers' lives better. So, look, I think that surely that will change at some point in the future. I don't know, but I think it would make more sense to be a market-driven change than anything else.
Gotcha. Yep. You're you're involved in Fintech Australia.
I left the board maybe a year ago, I think, but I was on the board for three and a half years or something. Yeah.
Yeah. Awesome. Yeah. Well, thank you for everything that organisation did and your contribution to that. We had the founder of Up Bank on last
Dom.
Actually. Yep. And we talked about sort of the future of the fintech ecosystem in Australia and just how like incredible it actually is today, and how sophisticated it's become probably over the past 5 years. What do you see where do you see that space going, and in Australia in particular?
Well, I think fintech in Australia is going to have a very big period ahead. I think like it's one of those things where if the right investment dollars are there to help grow businesses, fintech businesses, and fintech's hard because a lot of the time it's not really possible to bootstrap because there are high fixed costs with starting a lot of these businesses that you can't
Yeah.
just kind of
Okay.
go and do. There's often regulatory requirements. There's often broader legal requirements. There's obviously, as I said, the cost of like the infrastructure that you need to offer these products. And so I think that with the right appetite from the investment market, Australia has already produced a long list of really successful fintech businesses, likes of, Afterpay, obviously Up, you've already mentioned. It's a really good market to build a fintech product in because it's really well advanced from a technical perspective. It's a pretty middle of the road market in terms of like interchange rates and those sorts of things. And customers are also willing to try new things. So I think
Mm.
Australia sometimes is seen globally as maybe a very small market when it comes to comes to everything, but certainly in fintech, it's, what's your expansion plan? If you're talking to foreign investors, how are you going to get into bigger markets? But I think, and that's just a reality. Like, you've got to grow and get into other markets. But I think the benefit of growing in a small market, you really have to prove that the economics work. Like you've got to make your economics work.
Yeah.
You've got to make sure that the business can stand up and be, that the unit economics of the business stack up. Because if you can't do that here, so if you can do that here, then everywhere else is upside. You go to other markets where there's much higher interchange rates or, bigger markets, those types of things. I think if you can make it work here, you've made it work in a really technically advanced market. So that's great. So you can try it, but also not the easiest market from an economics perspective either. So
Yeah.
it's a really good proving ground, I think, for businesses that go global. And Australia's done a really good job producing, fantastic fintech businesses for a long time. And I'm
100%.
sure we'll continue to do so.
Yeah, like we would have had one of the fastest adoption rates of the contactless
Yeah.
payments. I
Yeah.
remember, we had that for, probably 10 years now.
Mm.
I remember, going over to the States and, that, most places didn't have it. In fact, most places were still default cash, really,
Yeah.
and probably still are. Like, it's interesting how quickly we do like take on new finance products, and
Yeah. And
just
just,
the way that cash
like,
has almost it's almost extinct in Australia. It's
yeah,
actually amazing, isn't
no
it?
one sees money anymore. I don't see real
Yeah.
money anymore.
No, my kids won't know
Really
what it
ever.
is, really. I mean,
Yeah.
I've got a 6 and a 3-year-old, and they're like, "What's that metal stuff?" It's bizarre.
Yeah.
Yeah.
Yeah. Yeah. Yeah.
Um, Normally, what I ask at the start of these chats is a quick pop quiz. If you could start a new business from scratch today,
Yeah.
and you could just sort of let Archer continue going on into success into the stratosphere. Like, if you were to start a new business from scratch today, what would it be, and who would you be helping?
Um, I have lots of answers to that question. I'm trying to think of one that's probably more interesting than the. I was honestly, I was thinking the first thing that came to mind. I want to start a power washing business and just like wash people's driveways because that's just simple. I can do that myself, and you can scale it. But
Uh, it's funny.
on
There's so many tech founders who have fantasies about doing businesses just like in the physical world,
yeah,
like something really
exactly,
low tech
exactly.
and simple.
Yeah, 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 yeah. No, look, and then I think that is like a tech founder delusion of like, oh God, everything's so hard. But everyone thinks their thing is the hardest thing,
True.
So maybe it's not that hard, but what we're doing.
Yeah, it's great.
Um, but yeah, I think like one of the more interesting things is like I do think there's like a really good space for innovation in the way that clients interact with psychologists. I think that's something that could be really improved and something that I've been thinking about for a long time and talking to people about. So I think there's like interesting things to be done there in terms of just like bringing that interaction into the future a little bit. There's lots of businesses that are doing that sort of thing
Yeah,
broadly in medtech. In
fascinating.
fintech, I don't know. I think like it'd be a shame not to do something else in fintech because you have to do all the trials and tribulations of building. Like, we're a lending business, we're a cards business, we're a B2B SaaS platform at the same time, and that's also hard. So you get to the end of kind of getting a product that actually works, and now we're trying to really scale it up, and it'd be a shame not to reuse those lessons. So
Yeah, for
I
sure.
don't know, but an immediate idea doesn't come to mind in the space or in a similar space to where we are.
Not that you want to share here anyway, I'm sure. Um,
No, no, I would share. I
Fintech, yeah,
just got no good ideas.
no, fair, no, fair. Like, yeah, fintechs. Like as much as we have some incredible success stories in Australia, like there's a lot of people who've tried to sort of shake things up as well, and it's definitely a hit or miss space. So congratulations on what you've achieved with Archer, man. It's actually really cool to see,
Thanks.
especially solving a pain point that um, just is almost that there's an equity sort of there's a fairness thing for the small business owners who you know otherwise would have to deal with these big behemoth
Yep.
banks and do things their way. Now you're actually making
Yeah.
it possible to do things our way, which is really cool. So thank you.
Yeah, 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 definitely.
What um what could possibly be next for the future for Archer? I know I've asked a lot of future questions, but for Archer in
Yeah.
particular and for business finance, what else do you see coming down the road?
Well, I mean, for Archer specifically, obviously, we're in a phase now of really being more aggressive in terms of scaling our product, and that cuts across various areas of our product across card controls, across issuance, rewards, integrations into third party systems that businesses already use. So
Yeah. So, for
we have
example, integration into Zero and
well, Zero
reconciliation
is
stuff.
obvious, right? Like so, yeah, we have Zero already, but there's a range of
Awesome.
different accounting platforms we want to be plugged into. But um, you know, Slack, Teams, being able to kind of request a card
Cool.
quickly via the tools you already use. The different methods of getting access, embedding cards in existing accounts payable processes, we think is really interesting as well. And I think there's a lot of scale that could be found there. In terms of, more generally, look, we think the technical platform we've built is really compelling. We've done a lot of work to do this ourselves. We're a direct member of the scheme of the payment scheme. So that means that we are the lender, like we're the financial institution. And that gives us a lot of flexibility to be quick and move quickly and leverage a lot of the tech that's out there without waiting on maybe a sponsoring bank or someone to support that. The other benefit of that is now we've got a pretty good technical solution that covers corporate cards from end to end. That covers onboarding, underwriting, issuing cards, customer management, all that sort of thing. We've built all of this ourselves, and so we'll put it together, I suppose. And for us, then it's kind of interesting to say, well, maybe we can help other institutions improve the experience of their existing customers through using that tech that we've built. So I think that going at this problem directly and solving it ourselves has put us in a really unique spot in terms of the tech that's come out the back of it around all of the things we've talked about, issuing, credit management, all of that sort of thing. So there's some interesting stuff we're working on that side of things as well.
Yeah, very exciting. And beyond the product development, how do you see growth of Archer happening? Is it within Australia? Is it a scaling of that sales function, or is there a marketing function thing that needs to happen as well?
No, I
As we
think
take it
like
to the next level.
at a certain scale, like obviously now we're at a point where we need to start to be a bit more thoughtful about how we market the business, and start to kind of build the brand a bit. I think you only get so far, and then there's a level of brand recognition that you need to crack into some businesses and get the outcomes that you're looking for. Is it just Australia? No, we want to be in other markets by the end of this year, at least one. So we're in the process of doing that. I think that for us and how we think about growth, it's like there's product growth and what we want to add to the product, and then
Yep.
obviously there's market growth and where we want to be. So yeah, absolutely want to be in multiple markets. I think that we're in a comfortable phase now where we've really hit that kind of like a business as usual rate of growth that we're really happy with. And so now it's about like, okay, we could continue adding sales reps and doing more of what we're doing, but how do we do all the stuff around the edges that we haven't necessarily done historically to get better leverage out of the team we have, who's doing a really good job. So it's a bit of everything, frankly, like upsizing the team but doing more of the new stuff as well.
Yeah, cool. Oh, very exciting, and best of luck for it. Yeah, it's wonderful to see what you've achieved so far, and what could be next. What's your one big piece of advice that you would give to founders who are looking to grow their startup?
That's a great question. I think like look, nobody needs my advice, but if I reflect on our journey and like the things I wish I had have known earlier, I think like, well, one thing is like, if what you're doing isn't working, and I could speak personally, again, on my experience here, I think like sometimes there's like a bit of aversion to truly solving a problem like that because, at least for myself and for other founders I've spoken to, there's a bit of a fear that you can't find the solution. So if you kind of sort of keep pushing on what you're doing and hope it's going to work, you don't have to accept the fact that it's not working and there might not actually be a solution.
Yeah.
And I think there almost always is a solution to those types of problems, particularly growth problems. Almost always. And the faster you can accept that what you're doing isn't working, the better. And the faster, like, there's all that stuff people chat about, fail fast and whatever, but
Yep.
that's a lot easier said than done.
Yep.
And I think like working out how to effectively fail fast or however you want to, phrase
Yep.
it, is a really good skill. And I think just like backing yourself more to know that there is like a solution on the other side of accepting that that's not working. So I think that's probably the number one thing I wish I had have thought about maybe earlier.
That's really good. I've never heard it put like that before. So yeah, no, thank you. Because I think what a lot of people think fail fast means, or what, be resilient, or, just keep pushing means, is keep knocking your head against the wall and eventually you'll break it down. But actually
Yeah.
what it means is back up and walk around the wall, or try something else, or, accept that that's, or just come to the realization as quickly as possible you need to take a different tack.
Yeah, exactly. And I'm sure there are lots of areas where that resilience and like banging your head against the wall does pay off. And I've had lots of experiences where that's the case, and it's just a matter of being relentless. But I think when it like on growth and that sort of thing, I think like constantly questioning why you're doing what you're doing in the way you're doing it is probably
Yeah.
the right approach.
Yeah. Great point. Thank you. We're getting to the end of the episode.
Yeah.
Another thing I like to ask in towards the end is just a little bit of a show and tell, which is, what's your favorite tool or device or toy or thing that makes your life better every day?
Okay, that's a great question, which I don't think I have a compelling answer for.
That's
I
okay.
think
It can
that
be boring too, right? Like a lot of people just say their notebook, and that's
maybe it's
you
not.
know.
The thing that comes to mind is not a tool or device, it's more like a habit.
Yep.
Is I really try and do like I don't know, it's like really cliche, so I don't want to sound like that guy. But I really do try and do like inbox zero every day and like empty my inbox every day.
Nice.
And I think that's like again, I think it's good to talk about it, but I think when you actually do that, I found that massively reduced stress.
100%.
And the other thing I have done I guess historically is like I always used to write a lot of lists when I was a lawyer. Like I used to write everything down, and then when I started this business, I sort of stopped doing that. But I've kind of gone back to doing that a lot. Is like writing down, like just kind of writing down everything at the end of the day. In terms
Yep.
of like, yeah, it could be as simple as a list or just like writing down my thoughts on something. And I actually found that's a really good sleep tool because I think
Brilliant.
like it just gets it out of your head, and then you have both a to-do list and like something to show your therapist, I suppose.
Awesome tips. Yeah, I'm very much on board with that. David Allen's Getting Things Done book. I don't know if you've ever read that, but big advocate for writing at the end of the day,
Yeah,
leaving your to-do list for tomorrow on your desk, and then
yeah,
going home and having the ability to like, because basically before we had the ability to write things down as cavemen, the only way that we would sort of remember to do something is it would just continue going on in our
mm,
head, and we would keep like a
yeah,
little reminder. Oh, there's a saber-toothed tiger over that hill. I need to remember that, and it would cause stress, but it's a good stress because it keeps you
yeah,
alive.
yeah.
So our brains, if we're able to offload and externalize that information, it
Yeah.
allows us to stop having it go over and over in our head, and we can
Mm.
trust the process that it's going to be there tomorrow, and we can go home and
Yeah,
relax and get a good
exactly.
rest.
And I struggled so much with like where to start often when you're like really like very stressed or like lots on or whatever.
Yeah.
I would often like I think the biggest stress for me was like, well, where am I going to start with all this? And I think
Mm.
like having that done for you from the day before is like I think that's the reason it helps sleep so much is because like you say, you're not getting that constant like built-in alarm clock of, are you going to do these things?
Yep.
Because you've put it down into something which is there and ready to go.
Yep.
And then you've
The
also got
tomorrow
like that
me's
starting
problem.
spot. Yeah, exactly. I love to outsource stuff to future me. It's something I live to regret every day.
Very good.
Yeah.
Well, thank you so much for being on Weird Growth, Oliver. Awesome chat, mate. Really wonderful to hear the success and the future vision for Archer. What's the final plug or ask that you have of people listening? What can they do if they're interested in getting involved?
Oh, well, I mean, the obvious thing is, why are you doing corporate credit cards with a major bank? It doesn't make any sense. That's my request.
100%.
Your bank doesn't need to know that we're seeing each other. We can do this quietly, and you have a much better experience. We'll give you cards that are faster to issue, easier to control, cheaper. You'll save money. You'll earn points. You get insurance. It's a really good product. So obviously, there's the sales plug. I think. Yeah, I mean that's the major thing. Like, I think we've got a really genuinely very good solution.
Beautiful.
And it helps people run their businesses. They save time, save money.
Yep.
It's a better outcome for everyone.
So it's Archa, archa.com.au. Get on and sign up. Sounds like a no-brainer.
Yep.
Oliver, thank you so much for being on Weird Growth. Fantastic chat. Really enjoyed it. And thank you everybody for listening to Weird Growth. Hope you enjoyed this episode. If you did, please do subscribe. We're on Apple Podcasts. We're on Spotify. If you're just listening to the audio version of this, you can see Oliver and my lovely mugs as well, with this video recording on YouTube. Please do leave a review. And until next time, I'm Cam Sinclair at Ammo Marketing. Thank you, Oliver. Bye-bye.